You are welcome. Today's trade ideas and signal will be the modification of past trades and what the market is doing currently, and how we can still find a way of capitalizing on the movement that we have here and still look for other point of entry, and how we can continue with the current trend that the market is doing. So we're just going to briefly review our trades from past. And if we check quickly, this is the origin of our trade. We have this internal structure that we projected to reject price and send it into the highs. As we can see, the first week of it, we've been spending 1 month on the trade now. And when we're picking the trade, I talked about it from monthly perspective and using all this range as our order block. Then we come on weekly to reduce it and to kind of see where the entry lies. And so do we on daily, and we pick this range here. And 4 hour, it aligned perfectly with what we want. And as you can see, we have that up and it's sending price into the highs. So, and that mark the beginning of our expectation of trend and price increasing and moving higher in the market. And when we go to 4 hour, we can see the same here. And it gives us a proper mitigation of that leg. And now we are sending price into the highs. Then we come into this level. And as you can see, we have a very pure structure up to this level. Then we have a shift. And this happened to be last week that we were expecting to capitalize on this proportion block that we have here. And as about the way market has its own way of doing things. It does whatever pleases it. And we're anticipating that we're going to have some kind of reaction from this portion block inside this other block. And what do we have? We have some kind of rejection from the level, and we're anticipating that okay, it's going to continue to send pricing to the highs. But what do we see? It takes all the liquidity below this low and all this low before sending price into the highs. And having this level, having market doing something like this in the market, then we know because we're at this level and we're yet to print all these legs. I picked this other block to kind of be what is going to give us proper mitigation of this level that we have here. But as we have it, the market did not, we didn't have proper mitigation of the other block before the pricing goes into the high. But what do we see last week? There was last week just come take out all the liquidity. But here is the major leg that we are expecting that market is going to protect. Then now we can now see that okay, money has been transferred from this level to this level. Then here now with what the market is doing currently, we automatically know that money has been transferred from this leg to this leg now. So here happens to be our range, the current range in the market, and our focus is going to rely on this place. And what happened here might also still happen here because we have this level, this liquidity void, although it has been taken and it has been capitalized on. But nonetheless, we have some levels that we've picked here. But with what the market is doing currently, I believe personally that with this leg here, and if the market close above, because we can see this is a 4 hour leg, and if market close above this high, then automatically we know that money has been transferred from this level to this particular level here because there's proper mitigation of all these levels. And if we check on 1 hour, we will see, we're going to see, we're going to see that, okay, we project that this other block is going to give us some kind of movement into the eye. But what we notice is these two legs that we have here, these two legs that serve as the other block here, were created based on the news that came out around that time. And the proper mitigation we are expecting is from this liquidity void to send price into the high, which is as properly do now. And we're anticipating that maybe the leg that was created due to news or is going to be, is going to give us something into the high. Maybe we're going to have a proper mitigation of the level. And if we check on 15 minutes, and that's the reason why because I checked this something and I was kind of questioning why we didn't have the mitigation of this level before we go into the highs. And I remember that's the reason why I decided in the first place to be using higher time frame points of interest instead of sticking with 50 minutes. I don't like picking my entries on 50 minutes because most times there is no proper mitigation of the level before it goes into there. But we check on 1 hour, you see it is properly mitigated. The reason why we are having all this volatility in the market is because of the fact that we can now be anticipating the fact that market is ready to surge higher in the market. And if you've been following me for a while, you will know that I've been talking about higher prices movement in the market on Euro USD. That we're going to have some kind of higher prices on weekly, and we are anticipating some kind of movement into the highs. And I believe with the kind of something we are creating here, and this is new month, but I'm still sticking to my previous narrative in the market. So, what is that? That we are reacting from this internal structure until the proper fulfillment of this leg. Then, we continue to follow the leg up. Last week gave us some kind of drawdown because of the leg that was created. But nonetheless, we continue to do what to higher in the market. And what the market is still doing, market list we follow, and that's just it. We're just speculating. So what we're going to do now is to take out all other orders, even though on my swing account I'm still in this trade. I'm still in this trade and I'm anticipating I'm in this internal structure on weekly and also on this that block on 4 hour and daily. So I have these two trades still running and I'm anticipating that we're going to go into the highs. Then I have another trade that I picked from this level. I guess maybe it's on the other something. So I have this, I talked about this leg being, being transcended, and we have this leg. Then this internal structure, I talked about it previously that, okay, we might use it to kind of, send price because it was transcended, then it's going to become a reclaim internal structure, which is currently doing. So it was reclaimed, but nonetheless, I didn't pick only the internal structure because of you know the range is too slow. I mean, it's too small. Then kind of pick this reclaim other block here because it is this other block that give back to this something. Then to take out all impulsivity out of the market, I have to choose this reclaim other block to kind of send the price higher. But nonetheless, we have this place in market that I was anticipating that we're going to get into and picked another level here that okay, if peradventure we didn't have then we have this other level in the market. So but with what we are having now, we didn't this one is not get properly mitigated. We didn't have a proper mitigation of this level, neither do we have proper mitigation of this level. So it was this reclaim order block that is still sending price into the highs. So we're going to erase all annotation and reanalyze the market based on what we are seeing and what we are experiencing in the market. So personally, we're going to pick a range without even because we know we've talked about how money has been transferred from this level. We have no business here any longer because we are now have this particular leg trending in the market. So without delaying ourselves or going higher, so we're just going to continue with our strong glow on 4 hour. And here happens to be flip in the market. It's still flip, some kind of flip because I would call it trend change or flip. It's still the same thing. But we're going to let's check 1 hour to see. We can properly call it okay. So on 4 hour is a major flip, as far as I'm concerned. It's a major flip. But if we come to we come on lower time frame on minor structure, we're going to see that's okay. We have MSS, which is a minor MSS in the market, and we have trend change on this particular leg. So we have GC, which is a structure break into the highs. Then we have this leg, but what we can see in the market is we have this liquidity void being created. And if liquidity void has been created, so we're anticipating that liquidity void is going to be what it's going to, and we cannot be expecting price to get into this level. But based on what market has been doing previously, so we are anticipating that okay, anything can happen in the market. So we pick this level and also this level. But what we can see is the proper mitigation of this particular leg here is send price into the high. So we have that level. But if we are to go back to 4 hour, what we're going to see is this particular leg here being another major structure. So that will be another major structure in the markets, which is strong low that will be anticipating the market is going to kind of here happens to be a weak high. So here automatically becomes a weak high and it has been raided. So what we have now is this strong low, and what we'll be trying to do is to kind of continue to capitalize on it. Then, as you can see within this little stroke, within this leg that we are trading, and here happens to be our, oh, we can pick the weak high yet because we are still within the first leg of it. So, but we have proper mitigation of all these legs going into the eyes. As you can see, there is no imbalance within it. But the only place that we can pinpoint now is this particular level here, which finally give birth to this impulsive moment that we have in the market, which we confirm as our OB. So let's go on lower time frame to see. And as you can see, I'm behind this particular level here. But we have this imbalance here, and this level can serve as our mitigation block. But nonetheless, I'm anticipating that okay, the high of the Asian range might be tapped before we go into the highs. So if I'm going to be taking any trades today and to be on safer side, and as we have all these legs here, if we go to 15 minutes to see, we're going to see a proper mitigation of other level. Another leg, another level down is kind of giving me concern that I'm thinking is this internal structure that we have here. So which markets can use to still go into the highs. And as you can see, it's aligned perfectly, but nonetheless, I don't know the reason why I'm not kind of comfortable taking the trace from that level. So I'm anticipating that we're going to kind of come into this level before we go into the high. So there, and as you can see, there is a shift here. And if at all, if the price is going to continue to go up, we are expecting that it's going to be this this level in the market. So uh, we're going to have, so if at all, to be on safer side and to have, and we are at the beginning of the month anyway, and if we are to check our news for today, which is today is 2, we have some high impact news in the market. We have S&P, and there are a lot of US S&P is coming around 245 today. And ISM manufacturing employment and ISM PMI of May and federal goods being speech. All these things are coming today. So for us to be on the silver side of the something, I guess we're going to pick this particular level in the market. We're going to stick with higher level, higher time frame point of interest. And as you can see, for our level cannot be, cannot just be overlooked. We're going to be picking this other block moving forward. So There's so many things that happens. I mean, that align perfectly with it. So we have can have a proper mitigation of the level before we move forward. So we're going to delete all other orders we have in the market, and we're going to kind of, stick with this particular one, which is kind of 28 pips. So that will be 28 pips in the markets. Um, and 28, we deal with 1 to 5, and that will be 28 times 5, which is 1,004. So we'll be anticipating 140 pips in return for that particular something. So personally, I'm not expecting any price to go below this low. So here comes to whatever makes price go below this low, then automatically we are on a reversal level again. So all other levels that we've picked below this low will be taken out of the market, and this is my new level that I'm anticipating to be trading from. So this is going to be our trade, at least for today. And if it is not properly mitigated today, then we know what we will continue to move from this level into the highs. And we're going to study the price around this internal structure, but it didn't give me enough criteria, I mean, enough reason. Well, what I'm seeing here, I'm not expecting price to react from this particular level. So I'm anticipating this other block that we have here. And that would be my trade for today, at least for now. We're already in this trade. We have three trades that are running. We have one from the internal structure, another one from this liquidity void. We have two from the internal structure. One from the internal structure on weekly, on daily, and 4 hour order block. We have one, and we have one from this liquidity void. Then we're anticipating this will be there's proper imbalance here. As you can see, we can be anticipating price to come into this level. But this internal structure is the only thing that I'm thinking I want to hold the price back. But nonetheless, we'll continue from it without any hindrance whatsoever. So, but this is the level we're going to be picking. So that'll be all. Thank you for watching, and I hope you are capitalizing on it. Have a profitable day.